Let's take stock of what our markets are indicating right now. And let me bring on board Nooresh to talk about that. Kunal, of course, is going to join us shortly as well. Okay, Kunal as well joins in. Nooresh, hi, morning. Let me start off with you. Good series gone by, starting off on a clean slate, lot of news triggers, election. We'll have earnings as well. Where do you think the market is headed next? And for today as well, what's the call?
So, the way India VIX is shaping up, the pricing of options does not indicate a major uptick or a downtick, which market expects on elections. Because if we go back to 2019, 2014, India VIX used to trade much, much higher than the current points. So, indicates the market is expecting not a plus minus 5-7% tick on elections. So, I would keep that away. Secondly, coming on to the way we are seeing the index shape up, we've started seeing leadership come in the banking space. Now, the problem in the banking space is the heavyweight, the largest weight is HDFC Bank, which has not taken leadership. But if you look at the names which have hit new all-time high yesterday, you have Axis Bank, you have ICICI Bank, you have SBI. All these three names are making new 52-week highs and all-time highs. So clearly there is leadership. In the same way, you look at auto names, we are seeing an Eicher Motors also come back and hit a new all-time high. So overall, it's the heavyweights in the banking space which are lagging behind. Then you have IT, which is not doing great. FMCG, which has been struggling. So there are spots where there is a lot of momentum, and there are spots where there is a lot of sideways movement. But overall, the bias becomes positive. So be more stock specific than index specific is the view.
Okay, stock specific rather than index specific, that's the view. Kunal, what would you rate the quality of the rally yesterday? Because a lot of people are saying it was just short covering and wasn't really something that you should build on for the May series as well. What's your own expectation?
Good morning. So I think there are a lot of different factors this time around. So for example, first on the derivatives data front, because yesterday we ended the April series expiring, and we are now starting off the Bank Nifty with one of the lowest kind of an open interest front over the last many series, and that's really remarkable because we are at a point where the Bank Nifty has been a huge underperformer relative, and I think when we are going in light, the expectation is that maybe the short built up which was seen in the last couple of series for the banking index. I think that's now behind us, and traders are now expecting that possibly we could be at a cusp of a much more stronger momentum breakout for the Bank Nifty. Now there are two parts to yesterday's rally. One is that prior to yesterday we had the mid caps and the small caps doing pretty well. The index was just about chugging along the 22,300 500 range. We saw two breakouts, one on the 22,500 mark for the Nifty, and the Bank Nifty coming very close towards the live high levels of 49k plus levels. So I believe, and on the back of this, we saw large caps outperforming many underperforming stocks on the verge of a breakout. So the mixture is quite vibrant. I don't expect this to be just about a short covering rally. I think this is a very serious and a strong trend in the making. Potentially, if we get global markets also supporting, then I believe that the momentum could just about accelerate for the indices.